Alright guys, you're looking at buying an investment property or you've got one and you want to know how negative gearing works, and here is a basic way of understanding it. By all means, I'm not an accountant, I'm a mortgage broker, but I have investment properties. So let's say you've got a $1 million investment property. Now let's make some assumptions, of course. So let's say that I owe $1 million and my rate's 6.5%. That means I'm going to pay $65,000 a year in interest. And the outgoings are about $15,000. That's your rates, your water, your insurance, the commission to the letting agent, for argument's sake. So your rent is 50 grand a year. Now what happens is, obviously we don't get that 50. You have the 50 grand, but then you got those outgoings. And so what we do is we go 50 grand is the income, but the cost to own that property, so the costs associated, is the interest, which was 65,000, plus the 15 grand of outgoings. So it actually cost me $80,000 to have that property. Well, 80 minus 50 is simply $30,000. So I actually lost $30,000. It's called a revenue loss. So what I want to do to make this even easier for you all is explain to you how that actually affects you. So let's say, again, an assumption you're on $100,000 a year and you're in Australia, you would be paying approximately 23 grand a year of tax. Now, because I lost $30,000, my taxable income will drop to $70,000. So rather than paying $23,000 in tax, I'm now going to pay $13,000. So I save about 10 grand on tax. So that is how negative gearing works. So why would you want to own an investment property? Even with a negative gearing, you're still losing 20 grand a year. Well, look, simply work out like this. 20 grand times 10 years is a 200 grand loss you would have incurred. But what's that property worth in 10 years' time? That's something to consider. Thanks for watching, and if you like my channel, please hit that subscribe button.